Good morning traders, Joseph here from Eightcap. Just going to have welcome to today's report. So today's New Year's Eve, we'll be seeing a continuation of some of the bank holidays, and there'll be further bank holidays coming on from tomorrow. So Europe started, some of the European markets started last night, and the Australian markets will be closed. Banks will be closed for tomorrow's New Year's Day holiday. Japan's also in the second day of a 4-day bank holiday, but some of the key other Asian markets like China will remain open. We're going to start with stocks overnight. We saw some further declines in US stocks. We saw the US 30, the S&P 500 and the Nasdaq all finishing lower. That was 2 in a row for the NDX 100, which tracks the Nasdaq, and we're starting to see just a little bit of pressure emerging on those short-term fast uptrends. So we can see with the Nasdaq that there was a fight back from buyers late in the session, and this level here is showing short-term support. So that's from 39561, and over on the Dow, we didn't see as much of a fight back, and that low there, it was a bit of a 2-point low has been broken, so a bit of pressure has started to form on that fast trend here. So we will just see in the new year how that eventuates and if selling continues or not. Now this was interesting because the Chicago PMI came out better than expected last night at 48.9. News-wise, we have Chinese manufacturing coming out at midday today, and at 2 a.m. tomorrow morning we have CB consumer confidence. So the market's looking for a high number of 128, and we'll see if that disappoints, if that's going to play out any further or not. So the US dollar last night, it had an interesting night. There was a bit of a fade late in the session from the euro and the Aussie, and from the pound. It was not the most volatile night, so we've seen a bit of buying this morning on those three main risk majors, and the Aussie dollar is close to testing yesterday's high. The yen gave a bit of a fight back last night. We can see it closed higher to the major risk currencies, the pound and the euro seeing the heaviest losses, and it also made a bit of a move against the JPY 225, which is the CFD that tracks the Nikkei, and they had a strong decline overnight, losing 1.57% after the yen strength's really cut into it. So that's another one that's sort of basically broken that medium-term trend now, and we're going to see if this congestion point here, which was a big consolidation through November and October, if that will offer a new demand. So we'll keep an eye if we see this level here, or if there's further selling, this level here comes back into the fray to offer support. So oil had an interesting session overnight. It was a very choppy session. It was a very wide, volatile move. It ended up measuring a daily range of just over 2%. Price did finish flat though, after testing higher and lower. And we also see gold continues to sit at a new point of resistance. We saw that buyers, this is a bit of a choppy session for gold. Buyers did finish the session higher, but they still remain stuck around this level here, which is that 15 points. So we do need to see a bit of a commanding move break above this level just to show that the trend's underway, or if buyers may take a short-term pause, we could see a bit of a pullback, and then we'll be looking for this trend to continue at this point due to that last strength in the breakout here, and then we'll see if we get a new lower high, and then to project price possibly further for a new extension higher. So that's it basically for tonight. Oh, sorry, we will just touch on the ASX. The ASX is having another strong session down. It was down nearly close to 0.8% this morning. That's basically from weaker leads. And keep an eye on the Chinese manufacturing today. If that's a strong disappointing, that could have an effect on the ASX and on the Australian dollar. So we hope you all have a very safe and happy New Year's Eve tonight, and wish everyone the best for 2020. So see you in the new year. Bye for now.